Welcome. You're listening to another episode of AML Conversations, where we sit down with some of the brightest minds in the financial industry to explore topical matters around financial crime and compliance. We hope you enjoy this discussion, and please be sure to subscribe for more.
Hey, Dan, I saw your session this morning on priorities, and there's like 4 other sessions at the conference today and tomorrow that are looking at the FinCEN priorities. We obviously don't yet have a regulation, so what's going to mean from a implementation standpoint. But I was taken by some of your comments this morning, and we've talked offline a little bit about this, about the value proposition. So first, talk about the value proposition about having priorities, and then let's talk about, we're not going to guess what the implementation is going to be, but sort of what will be some of the challenges for your clients.
Okay. Well, it's good to have priorities. We've never really had them, at least not in any kind of an official sense before. So now at least we have an idea of what the government thinks is important in terms of AML compliance. So I was talking a little bit this morning about having an alignment,
right,
so that there's a, meeting the minds between what the government thinks is important along with what the industry thinks is important, which I think is really like necessary and critical to make this all work. In terms of clients, I think there's been a fair amount of head scratching,
right,
almost from the beginning about so what do we do with these things?
Yeah.
And I think it's compounded somewhat by the number of priorities and the fact that they're all of equal weight.
Right.
So there's no priorities within the priorities. And FinCEN and the banking agencies were, they suggested back in June that, don't sit on your hands with this stuff, start thinking through how you're going to incorporate it into your programs. And I think that some of my clients have been doing that.
Right.
And areas in particular where I think they're impacted would be like with the risk assessment,
Yep.
Documenting exposure or I suppose non-exposure. And then to the extent you have exposure, wanting to make sure that your controls are adequate,
right,
to address the risks. And I think I would also expect to see a correlation with SAR filings, that we'd see an uptick in SAR filings in the impacted priority areas.
That's an interesting point, because it seemed to be tied, like you said, to risk assessment, to SAR filings, to overall AML infrastructure. One of the things that struck me, so the backstory that I heard, and it could be totally anecdotal, was that some groups that were pushing for the priorities pushed for them in the hopes of, not that they wouldn't have to look at anything else, but that they could really de-emphasize other things. That was one thing that I thought was interesting. And the second part was something that was said this morning, one of the other panelists, that does that mean that we're now going to be looking at what's the actual crime versus the suspicious activity? That seems to be more of not even a hot take. That to me, I wonder if that is even feasible, given what we both know about the SAR infrastructure. But what was your understanding about why this was? Outside of, we want to know what government thinks is important. That's always been the case, right?
Yeah,
but this is, not to my mind, let's not worry about elder abuse or other issues, but these are things that the government, national security, law enforcement, all the agencies said, these are sort of the major drivers of the movement of illicit funds, but we'd like you to spend more time and resources on that.
Yeah, and the thing is, I think there's a tension, because if you spend more time and resources on these 8 areas, you're going to have to spend less time on other areas.
Sure.
And what we don't really know, what we don't have from the government at least, is an idea of the other areas where they can roll back, if there are any.
Right.
My concern, my fear, what I expressed this morning is that there really is no rollback in anything else,
right,
that you've got to continue to do everything you've been doing, and you've got to do a good job in these areas.
Right.
And, the real key will be, when this is finally fully implemented, which is going to be a good bit down the road,
right,
what do the regulators look for when they come and examine your institution? If you do a good job, in other words, let's say you do a good job on the eight priorities, but you maybe a not so good job with respect to technical compliance with some of the rules.
CIP maybe. Yeah.
CIP maybe.
Right.
So what does that turn into in terms of how they measure effectiveness, and does that result in supervisory or even enforcement actions? We don't really know, and I thought that some of the speakers on the panel this morning, Andrea Sharon in particular, made a good observation that this is not going to happen overnight, that this is going to be iterative and it's going to be a process, and probably a few years before we really kind of get an idea of what this ultimately looks like.
That's so true. And then I think to your point about linking things, all of this is connected, right? It's the request for information on risk assessment. It's on AML infrastructure, on effectiveness. So it all has to be logical and rational. It has to all work together. So that, by definition, is going to happen tomorrow. It could result in some reduction in focus where there won't be criticisms. We talked about, my words, not the panel's, tiered SARs, like for structuring. You just, your system pulls out potential structuring, don't fill out the narrative, just send it in. So that could be both a cost saver and a focus. Law enforcement is still getting the information, but you're not spending a ton of time and energy. But it seems like everything has to be linked for this to be effective at all.
Yeah, I think it's very telling, too, that when you look at the agenda for this conference, you just mentioned it, how many of these sessions, in one way or another, implicate the priorities?
Right.
Like I think you said 4?
I think 4, yeah.
And probably some others where it's going to come up, which shows you how important these priorities are and how holistically it has to be viewed, because it really impacts various aspects of your entire program.
Right.
So I think SARS is a great example that came up during our discussion of where reform is needed. There's probably too many SARs filed, too many SARs that just are of marginal or no interest to law enforcement, but it consumes resources to produce them. So if we could crack that nut, that alone would be a big step forward, I think, in making this whole regime more effective and definitely less costly and burdensome.
Yeah, and again, to that point, there is studies required under the same law about the effectiveness of SARs and BSA and threshold, all that kind of stuff. So all that stuff has to be analyzed as well. And so even though these reports will come out at different times, I think, we heard this morning from a Treasury representative about real estate, that's coming out at some, all these things are connected. I mean, it just are. And if you look at the priorities, it's corruption, it's human trafficking, it's fraud, both garden variety and obviously complicated frauds. It's domestic terrorism, international transactional crime. I think the only one that sort of struck me is, I get it, but I don't know how much the banks can do, is proliferation finance. That seems to be, it's not a stretch because it's an issue, but all the other priorities to me were sort of logical that you and I, as AML people that have been doing this forever, we would have come up with probably 7 of them. In terms of the big ticket categories.
Yeah, I mean, that was one of the observations I had when I first saw them, is that other than proliferation financing, which I agree is important, but it's probably not going to affect that many institutions, but all of the other areas are areas that you would have expected to be there. I didn't think that there were really any surprises. And, in terms of the connectedness of all this, I think that the AMLA, the entire statute, really is a swing at the fences on the part of Congress to try to revamp a regime that is struggling to keep up with the times. And I think the priorities, Section 6101, I think they are really the heart of this in a lot of ways, because the way that they affect all the other areas and so many of the other provisions that are in the statute.
That's so true. You and I have both been around since Patriot Act, even before that. So this is clearly potentially the most dramatic change to the infrastructure ever. And I give Congress a lot of credit. A, it was fairly bipartisan, which never happens anymore.
Not these days.
But B, as I've said many times, the studies are connected to strategies. So the studies in the old days, if I was the Bankers Association, we'd want to study and kick it down the road. That's not the case now. You do a study, but there has to be a strategy at the tail end of it. But they're all, as you say, interconnected. So whether it's risk assessment, SAR reviews, thresholds, value proposition, innovation, all those are tied together. So, I give them a lot of credit for doing this.
Yeah, and I've made the observation, others have as well, that this is the most significant AML legislation since the Patriot Act. But I would go a step further. I would say it's really the first true AML reform legislation.
Absolutely.
I can't think of another statute that I would put into that category. And, I wonder, in terms of it, hanging together pretty well, if part of the reason for that is that it was so long in coming. And you contrast it with the Patriot Act, which was passed 5 weeks after 9/11.
Exactly,
I mean, those were disparate bills that had all been kind of chunked together in a very hasty way, without a lot of deliberation. Here, you had a lot of deliberation over a long period of time, and as you know, on a bipartisan basis.
Right, yeah.
And so we end up actually having legislation that's pretty coherent.
So the FinCEN has spelled it out several times, and I think congressional report language says the same thing, that the priorities are going to show that not all priorities are the same in terms of impact on institutions. So a big bank might have this particular threat, small bank. So if they draft the regulations that way, that'll be good, but I think you raised it, and we talked about it just earlier in this conversation. If the regulators still say, okay, Dan, your client doesn't have an aggressive human trafficking detection program, as opposed to having examples where they have filed SARs, that's going to sort of negate the value proposition here. So they really have to be careful about what the regulators end up overseeing, right?
Yeah, I'm one of the fears I have with it is that this itself becomes a form of box checking.
Yes.
Where you know, it's a documentation exercise,
right? And
you know, documenting that you have done something, but documenting that you don't have exposure, and it's kind of a shame if it plays out that way, and that's all this becomes.
Right.
In other words, being able to just demonstrate to your regulator that you've thought about this stuff and you check the box. It could be so much more than that,
right,
if it's implemented in a different way. Yeah. But there has to be, you know, there has to be alignment on a lot of different fronts. Within the government, we say the government like it's a black box,
right,
but as you know, it's not.
Yeah.
You've got a lot of stakeholders here. So if law enforcement's on the same page with the regulators are on the same page with FinCEN, that's the kind of symmetry that I think you need here to make this really work. And then, you know, it has to filter down the examiners. So we talked about that this morning.
Yeah.
If the examiners don't get the memo, and they're still examining banks exactly the way they were before this was enacted, then this really just does become an additive requirement. Right. It doesn't really accomplish what it was supposed to.
As folks can tell, we are actually in the exhibit hall at the ACAMS conference, and nobody got hurt with that last, whatever it was that fell. We just want people to know that that's why you have the noise behind us. The other a question that came up was with the priorities, what impact, if any, would it have on de-risking financial inclusion? And it's an interesting issue. You and I both have been involved in various projects that have tried to address inclusion. But what's your high level thought? Obviously, we don't know yet until these are out. Yeah. But you know, I think when we look at things like, you know, I was at a session earlier today where they talked about Afghanistan and getting money there, and then people on the panel were saying, well, you know, we agree that should be the goal, but remember, there's terrorist activity too, so we have to sort of do both. So it seems like priorities would be the same thing. If you're doing priorities domestic terrorism, are we not going to give loans to certain people? I think it'd still be case by case. But if a client says to you, is this going to change my onboarding process? What's your initial take without knowing what the reg's going to say yet?
Yeah, that's tough to say. I think that you know, the expectations that we have now in terms of identifying customers and due diligence, I mean, that's not going to go away because that is bedrock, you know, AML compliance. But you know, could it be changed into more of a to be more risk-based than it really is right now? Because it's not that risk-based right now. I don't think.
No, I agree.
And I think that really is connected with the de-risking problem, because de-risking to a large extent is occurring and has occurred because of the costs involved in doing technical compliance.
Right.
So if there is some, you know, easing on the technical compliance part in terms of how regulators look at AML compliance with, you know, a corresponding increase in, you know, doing investigations within the priorities, then at least I could see theoretically how that might actually help with de-risking. That was, I think, a point that Craig Tim, who moderated our panel, made this morning. I hadn't really thought about that a whole lot. You know, initially I thought, you know, maybe not. On the other hand, though, I think another driver of de-risking is just sort of the whole reputation risk area.
Right.
And you know, apart from the cost, it's just the idea of being connected with an industry that, you know, perhaps unfairly has been, you know, put into the high risk bucket.
Yeah.
And the result of that is they have a hard time getting bank accounts and maintaining them.
This is a little curveball, but you can definitely hit this one. I was thinking today, it's been 30 years since the Civil Safe Harbor was crafted.
Wow.
I know, because both of us were involved in that process. Wow. Yeah. So 30 years later, it's generally stood the test of time, we've got to say, and it definitely has helped institutions to make decisions that You're going to file as opposed to not because they're over filing or defensive filing. It's we have a little bit of information, we may not have enough. What's your take, both from the government standpoint, where you were for many years, and now as representing clients in the private sector, about the value proposition of the civil safe harbor?
Oh, well, I think it's off the charts.
Yeah.
I think if you take that away, or if you were to weaken it, I don't think you could reasonably expect financial institutions to file, number one, as many SARs, but also the kind of good SARs with robust narratives in them that are the most useful to law enforcement. And I just think intuitively that when banks do that, they are relying on the safe harbor, because you think about it, what a counterintuitive thing it is to do to file a SAR.
Right.
I mean, you're essentially turning your customers over to the feds, to law enforcement.
Yeah.
I mean, what business normally does that?
Right.
But in our industry, we do that. And part of it's because it's required, but I think also people recognize that, if we don't do this, then we're not going to be able to maintain financial integrity,
right,
both within our institution and more broadly. So, no, to me, it's absolutely essential. And, it has, as you know, it's been
challenged a few times.
Yeah, chipped away at a little bit,
Yep,
particularly in the beginning.
Yep.
But for the most part, it has stood the test of time,
Right.
and I think we're all better for it.
Yeah. I will take that as a partial legacy for having the foresight with talking to all of you guys at the time, saying we don't want a good faith exception, because that was going to result in so much litigation. We were able to get that out of there, and that's obviously helped us being both as broad and helpful as it's been. Let me end on this, and I think I've done a couple of podcasts with you over the years since you've left the government. I think even while you were there. But one of the things I'm always curious about is folks like yourself, Rick, and others that have left the government to go into the private sector. And you talked about this before, but what's for you has been some of the biggest eye-openers about now representing clients that before, not that you prosecuted them, but obviously you had to be different in terms of enforcement mentality, and you worked, you have an excellent reputation of working with institutions, even if you had to penalize them. But what's been the biggest, besides the obvious, that you're on a different side now, for you over the course of the time you've been in the private sector? What's the biggest difference?
I have a better appreciation of what happens in the trenches. Mm-hmm. And when I was in the government, I'd come out to events like this and, say whatever I had to say. And, people come up to me afterwards. This happened to me so many times. Right. They say, you sound pretty reasonable, but let me tell you about that examiner.
Right.
And I would just go, oh God, here we go again.
Exactly.
Because these examiners, they didn't work for me.
Right.
And I felt like even when I was in the government, that I was hearing this enough from enough different places to realize that there was something to this.
Right.
So now I'm in the private sector. I'm advising banks that typically I'm advising banks that are undergoing rough examinations.
Sure. Right.
And or defending enforcement actions. And I see a lot of that. And I don't mean to disparage bank examiners.
Right.
They have a job to do. It's a really hard job.
Yep.
And for the most part, they do it well.
Yep.
But I see an awful lot of attention to minutia. And again, kind of tying back to the priorities again. Banks who are beaten up pretty bad, not necessarily enforcement actions, but MRAs, supervisory actions, things that aren't public, but they still require a ton of work to address. And I look at it and I say, this doesn't really seem like it's really that important. I've seen banks criticized, for example, because they may have decided not to file SARs on certain low dollar transactions that just don't seem all that important.
Right.
So I think that's probably the biggest eye opener. I don't think I was had blinders on when I worked for the government, but I think I see things more clearly now because now I've seen both sides of it.
Dan, thanks for your time. Thanks for your quick insight on the priorities, and we're going to continue to follow this, obviously, because the proof is always in the pudding, right? So when the regs are final, now we'll know, and then we won't know for a while how the regulators are supervising that, and then we also won't know until studies are done on BSA value, threshold issues, law enforcement needs, all that kind of stuff. So it's gonna be a while, but it does keep us all engaged for probably the next couple of years.
Yes, it will.
Thanks, man.
All right.
Thanks for listening to another episode of AML Conversations, brought to you by AML RightSource. To make sure you're staying up to date with what's going on in the industry, be sure to subscribe wherever you listen to your podcast to get the latest episode.